Good morning, everybody. Do you know what? I've gone live early this morning. I'm just parked up by the office, and before I go in, I wanted to share a few little tips with you about how you can raise finance or cash or funding for buying property investments and investing yourself, because it's a question I'm asked all the time. People that want to get into property always ask, well, how can I raise the money? I haven't got any money myself, or I've got very little money myself. And there are some very clear and simple ways that you can raise money to invest in property and make profit. So I wanted to share some of those with you, and I wanted to give you some ideas on how you can raise those funds. It's all good and well knowing where you can raise funds, but you also need to know how you can raise money to invest in property as well. And this will work brilliantly for people that want to get into property investing for the first time. Look, I'll just crack on if everyone doesn't mind. I've got an announcement to make at the end of this as well, so stay tuned. This is gonna be huge. So first of all, look, there's the obvious route of buying a property through a mortgage or a buy-to-let mortgage, however you decide to do it. So I wanted to give you a couple of little points on that, and also how mortgage lenders calculate what you can borrow. But first of all, normally speaking, you can borrow up to 75% of the value of the purchase. Now, if you're doing a flip to let or a flip to sell, then you're going to raise 75% of the purchase value, but the property has to be currently habitable to be able to get a mortgage on it. And that sounds really obvious, but there is a bit of flexibility on that. You might well have a property which has a functional kitchen and a functional bathroom. At least it has utilities all connected and various other things. But basically, is a tenant able to live in that property today, on the day of your purchase? If the answer is yes, then you can fund that purchase by a standard buy-to-let mortgage. And that's the way I'd recommend doing it, because then you can you save a bit of money in fees and save a bit of money in interest too. So you'll need a 25% deposit. At the moment, you're looking at about 3.5%, something like that, depending on you, depending on your circumstances, as an interest rate. And you can normally take a 2 or a 5 year fixed rate mortgage too. And that simply means that you will fix that interest rate for either 2 years or 5 years. There are other products available, but definitely speak to a mortgage advisor on that. The next way you can fund a property purchase is by something called a bridging loan, bridging finance. You've probably heard people talk about bridges and things like that. I'm not talking about the construction bridges. I'm talking about a loan. And in its simplest form, a bridging loan is a bridge between the property purchase and the finished job. So if you are buying a property that you intend to refurbish and then either sell or refinance or keep, so you've probably heard the term buy, refurbish, refinance, BRR, BRR. You probably will do it with a bridging loan. Now that is where there are bridging loan specialists who will lend you, again, up to 75% of the purchase price. That gets the property bought, and you're the owner, and then you can carry out the work. And then after the work is done, you can then take out a standard mortgage once the property is in a habitable condition. So again, there are a few little points to note. A bridging loan lender will normally have a minimum term. Now, why do they have that? It's normally 3 or 4 or 3 to 6 months, that sort of area. Any more than that, it's probably more of a sign of the times than the lender themselves. But say, for example, it's a 3-month minimum term. That means you'll pay the bridging loan interest for a minimum of 3 months. Now, most bridging loan companies do provide their loans for, they calculate their interest on a monthly basis. So the one I've just done, for an example, it was 0.79% of the loan per month. That's the interest I paid, plus an arrangement fee, which was actually about 2%. Just very quickly, do make sure you calculate your yield before you commit to a bridging loan. Make sure you take into account those costs as well. So anyway, a bridging loan acts as a bridge between purchase and refinancing or remortgaging or putting a normal mortgage on that property. So it is what it is. It says what it is, what it says on the tin. So the third way that you can raise funds, and this is going to sound really ambiguous and very obvious, but you can find an investor. So the big question is, where the hell are investors? Well, if I said to you they're everywhere, then again, that sounds really obvious, slightly ambiguous. So a couple of ways you can go and find your own investor. And by the way, an investor is anybody that is happy to lend you money in return for an interest rate themselves. So a common figure is 10%. And think about it from the investor's point of view. If they lend you 100 grand, they haven't got to do anything. They've just got to sit back, let you do the job, let you take all the risk because the loan is being lent to you. And then they sit back and they get their 10% at the end of the deal. Now, some variables on that are that some investors will lend you some money at 10% interest rate with a minimum of 6 months. So 10% per year, but with a minimum of 6 months interest. So you will pay at least 5%. But for any investor, the quicker you can get your money back and the quicker you can get your return on investment, the better it is for everybody. So you'll quite happily take 5% for 6 months work rather than it's exactly the same as 10% for 12 months work. So find yourself an investor. Now, where can you find investors? Well, there's loads around. And the first place I would say is Facebook. Get yourself on all of the property groups and pages and put the word out there that you have a property deal and you're looking for an investor. Now, as David Siegler said to me yesterday, find your investor first before you go and get a property deal. Because if you speak to an investor and say, hey, look, I'm looking for a property deal and I need a funder, I need a financier, I need an investor, and this is the terms I'm happy to offer, then you can go and confidently go and get a property. Otherwise, you'll go and get a property and then you've got no money to buy it. And then the estate agent or the auctioneer or the lawyer or the accountant or whoever's offering you that property will not be very happy if you can't then progress with the purchase. So Facebook is the first place. The second place is go networking. You know what? You can go to business networking meetings as well, and you can speak to other business owners who might know people with money that are interested in lending that money at a specific interest rate. You can also go to all the investor events. Look, we're currently still in lockdown-ish, but you can still go to those investor events and pick up really good people that are interested in just staying out of the property hunt, staying out of that whole process of dealing with agents and lawyers and surveyors and mortgage lenders and mortgage advisors. They just want to get a quick return on their money. So find those people at property investor events, landlord events, all of those types of things. Hey, do you know what? Let's be bold. Put a t-shirt on saying, I've got property deals, I'm looking for a property investor. Why not? I don't mean that. Or maybe I do. Next way, the fourth way that you can raise funding is by doing a joint venture. And if you find somebody, and I'll give you an example, if you find a builder and the joint venture is you purchase the property, they fund the refurb, then you've got a nice little joint venture. Another joint venture might be similar to an investor where they put most of the cash up, you put some more of the cash up, and then you equally share the profits. And you might decide to share the profits in a ratio that matches their investment and your investment. Joint ventures are quite easy to find because there are lots of people with less money that still want to make a profit. So maybe you could find somebody who's looking for a property investor themselves and say, well, hey, if you've got 10 grand and I've got 10 grand, let's do this together. Fantastic, joint venture. It also means you share your risk. It also means if anything comes up that wasn't expected in the refurb, you share the cost, the additional cost. So definitely find yourself a joint venture. Where can you find a joint venture? You're on it right now. Facebook. There are actual groups for joint ventures. And there are other groups, and there are massive groups where people can find joint ventures and work together. Quick warning. Do not work with friends or family. And I'm going to put a caveat on that. Without clear agreement before you start. I promise you, if you don't have clear understanding of who's doing what, who's getting what before you start, and also a clear outline of what the risks are, then there will be arguments. So the fifth way that you can raise funds for yourself, it's going to sound really obvious, but let me add some flesh to the bone. Save up some money. Yeah. Obvious. But there's a bit more to it, because how do you save up money? If you are a regular person and you've got a regular job and you've got a regular income, how can you save up 25 grand for a deposit on a purchase? I'm making that number up. Well, first of all, I met with David Siegler yesterday, and one bit of advice and one way to save up some capital is to deal package. Now, if you are going out looking for property deals, investment deals, then when you find one, excuse me, when you find one, package that up into a product. Show a potential investor how much money they can make from that property, and then sell it to them. Sell it to them for a few grand, and then just save up that capital. It's easy to do if you put the effort in, and you save up that money, and then bam, you can buy your first investment property. Now, David was telling me about a client of his, and I won't mention any names, who wanted to raise some money to invest in property and decided to go and package up a few property deals, because she was going around viewing loads of properties, going around and speaking to estate agents and putting the effort in to find property deals. And so she found a couple of people that were also looking for property deals and had some money. So when she found one, she packaged it up and she offered it to those investors, and she made 3 grand. Brilliant. So she did it again and again. And in her first month of doing it, now you won't believe this, but it's absolutely true, straight from David Siegler's mouth, she did 25 grand in fees in her first month. And in her second month, she did it again. And her third month, she didn't. Anyway, so you can go out, package some deals, sell them to investors, get the money, save up your own money, and then buy your first property deal. The sixth way that you can raise some money is crowdfunding. Now, I'm not talking about go onto a crowdfunding site. You can do that if you want. I'm talking about a real traditional way of crowdfunding. And I'm going to give you one example. You could speak to lots of people that have 3 to 5 grand to invest and say, hey, I've got this property deal, I'm looking for funding. So if you 10 people have 3,000 to invest, then we can all invest in this together, and we can do a joint venture via crowdfunding. Crowdfunding is basically where a crowd of people fund something. So you can have more people investing less, and that gets your property deal funded. Where can you find crowdfunding deals? Well, look, unfortunately, in this property business, you do have to speak to people. Speak to agents, find out if they know anybody that want to invest in property deals. Find out if they know anybody who has a smaller amount of money that they want to invest. Collect all of those people up, package it up again. It's all about packaging. Package that deal up and say, hey, I need 3 grand from 10 people. Now, correct me if I'm wrong, anybody watching this or anybody that watches this later, if I said to you, hey, if you could put 3 grand into a property investment deal and you're going to get a decent return of 20%, let's say, you'd be all right with that, wouldn't you? Well, I hope you would. Anybody would like to make 20% of the money. Just put that down. There you go. Anyone would like to make 20% of their money, I'm sure of it. So crowdfunding is a real quick and easy way, especially if you know lots of people. Just start talking. Start putting the word out. Going back to my previous point, as long as everybody knows what their responsibility is and everybody knows what their liability is and also what the profits are and how the profits are being shared, then I think you should go for some crowdfunding. Certainly get out and start speaking to people. And the last way I want to share with you kind of goes against a point I made earlier on, but I do think you should speak to your friends and family. But You have to be careful if you're going to invest with friends and family, because everybody has to know this is precisely what you are going to invest. This is precisely what you could lose, and this is precisely what you could gain. These are some risks along the way. These are some challenges that we may face along the way. And if everybody is clear, then you can't lose with that. But I would suggest getting it down in writing and letting each person sign that so that everybody is undeniably clear on what their role is and what they stand to lose and stand to gain. I would also say any friends or family that are investing with you, take them round to the place so that they can see what they're investing in. So those are 7 ways, and just to recap those 7 ways, right? Now they sound pretty obvious, but I must say some people kind of don't take into account that they can go and raise finance for property investing quite easily. But first way is mortgage, a buy-to-let mortgage. That's the simplest and quickest way. And if the interest rates are right and they're good and the fees are good, build them into your calculation, take a mortgage, don't use your own cash, or use as little of your own cash as you can. You need to just keep investing. A bridging loan is another really good way if you've got a property that needs refurbishment and it's not habitable at the moment. Go and get an investor. They are out there. Do you know what? There are so many people out there that just want a safe and decent return on their investment without having to put the work in. People that have built up their fortunes. There are some wealthy people that might have 100 grand and they don't really know how to invest it. Next way is joint ventures. That is quite obvious. There's a number of different ways you can do joint ventures. You can do financing only. You can do joint ventures with a builder. You can do joint ventures with very many people, friends, family, whatever. Next way is save up some money yourself. You can do deal packaging. You can just do standard savings. You can sell a load of stuff, whatever it is, obviously. Crowdfunding is the next way to do it. Speak to lots of people that might invest a little amount each. And the last thing is go to all your friends and family. Do you know what? There are lots of people that have equity in their properties. There's lots of people that have savings, that have got inheritance coming, redundancy pay. So those are some ways that you can raise finance. Now, I'm not talking about your own finance, because of course you could also have equity. You could also have savings and inheritance coming, redundancy pays, all of those sorts of things. You might have those coming, pensions. And the last way was friends and family. Again, be careful with that. Now, I just wanted to make a very quick announcement, because today my podcast is releasing the epic episode where I interviewed Rob Morton. Today is the full interview. So head on over to wherever you listen to your podcasts and search for The Anonymous Landlord, or just search Tom Soane, and that's where it is. And it will be released today. So go and subscribe to that, and then you'll be notified when that comes about. But yesterday, I spent the whole day with David Siegler, who is the master of deal packaging. So I've just told you a really easy way to raise finance for investing in property. And look, I'm not going to go into too much detail about how you can go and deal package other than the basics, but David Siegler is the master of deal packaging, the master of property investing. So that podcast is coming in the next couple of weeks. We're just putting it together now. And David gives loads of real valuable insight into how you can package up a deal. And deal packaging is one of the fastest ways to raise quick cash over and over and over and over again. So it also helps you link with investors and link with agents and auctioneers and property people where you may get more properties. So that podcast is coming too. And I spent the whole day with him yesterday. You know, we recorded some really cool videos as well. The golf was shocking. If anyone saw the live I did yesterday, the golf was terrible. But you know what? We did it. We had a really good day. And David's a really good friend of mine. I've known him for a number of years now. And we've done a lot of work together in the past. So really happy that we got that chance to spend the day. And I tell you what, the advice was incredible. So I'm going to do another live. I don't know if it'll be today. It'll probably be at some point later. because I want to give you an update on everything I've done and everything I'm going to be doing, because some of it is going to be really valuable, I think, for people that want to get into property investing, for people that want to be landlords, for existing landlords, self-managing landlords, agent-managed landlords, because I want to give you a heads up about what's coming your way, because there's loads. I can't believe I've only been going for a short time on this, and it's just going. I'm having so much fun doing it, and hopefully people are getting some value out of it. Anyway, so that'll do it for today, I think. If you've got any questions, post them in the comments below. I'll post a link to the podcast below. Hey, do us a favour, share this round. It would mean the world to me if I could just get my name out there a bit more, and I can get my advice out there a bit more, and certainly all the opinions and advice from the people that I'm talking to as well. So yeah, help me out if you don't mind. If you don't want to help me out, that's fine. I'm not forcing anybody to do it. I'm not making any money out of this. This is purely me doing this for free. So share this round. That'll be really helpful. So I'm going to leave it there. My name's Tom Soane, and I am the Anonymous Landlord.